There are reports indicating that some hotels may be undergoing cost-cutting measures, leading to potential reductions in services or amenities. In addition, there are discussions about the exclusion of Caesars Entertainment from the prestigious Standard & Poor's 500 index, a move that reflects internal and external challenges faced by the company. Meanwhile, many visitors are expressing doubts about whether the famed Las Vegas Strip still holds its magnetism as a premier destination for leisure and entertainment, questioning if its allure has diminished over recent times. It's essential to understand precisely what is happening with Caesars, what these developments signify for the broader city of Las Vegas, its numerous visitors, and the residents who call this vibrant desert city home. At the center of this story is Caesars Entertainment, the company responsible for managing some of the most iconic resorts and gaming establishments along the Las Vegas Strip. Recently, this entertainment giant has been experiencing a period of decline, signaling potential trouble ahead. The second quarter of the year 2025 revealed that their revenues in Las Vegas had decreased by approximately 3.7% compared to the same period the previous year. On the surface, this might seem like a modest dip, hardly enough to cause alarm or prompt major concern. However, in the context of a company of Caesar's size, one managing countless properties and generating billions in revenue, that small percentage decline translates into a loss of tens of millions of dollars. This is a significant financial setback, illustrating firsthand the volatility and vulnerability of their operational model. In addition to reduced revenues, Caesars has also experienced a decline in the number of hotel rooms being occupied. Specifically, their occupancy rates have slid by roughly 2 percentage points, which may seem minor. Yet when viewed in terms of actual nights, it amounts to approximately 27,000 fewer nights booked within a single quarter. This decline in guest numbers not only impacts immediate earnings, but also signals broader shifts in visitor interest and demand. Adding to the gravity of their situation, on the 22nd of September, Caesars was officially removed from the esteemed S&P 500 index. This is no small matter. The S&P 500 is considered the definitive list, encompassing the United States' largest and most significant publicly traded companies. Being part of this index confers a certain prestige, visibility, and recognition, acting as a mark of corporate stability and success. Conversely, being excluded from it serves as a stark indication that a company is struggling, whether due to reduced market capitalization, financial instability, or mounting challenges that threaten its long-term profitability. This exclusion has tangible consequences. Many investment funds and large institutional investors automatically hold positions in the stocks that are part of the S&P 500. When a company's stock falls out of this index, those funds are compelled to sell their holdings. This mass selling pressure can further depress the stock's price, intensifying the downward spiral. For Caesars, this process has been ongoing. Its shares have plunged by about 30% since the beginning of the year and have suffered a decline of more than 50% over the past 2 years. Such steep drops are alarming signals to all stakeholders involved, from shareholders to lenders. The company's financial troubles are compounded by the fact that Caesars carries an accumulated debt estimated at around $12.3 billion. In an attempt to bolster their cash flow, they have sold off some of their major assets, such as the lucrative World Series of Poker and the Link Promenade development. But these efforts have not yet addressed more fundamental, deeply rooted issues. The current financial landscape suggests that their problems run deeper than short-term cash shortages. Naturally, this raises an important question. What are the underlying reasons behind these setbacks? The answer is multifaceted and extends beyond the immediate concerns of Caesars Corporation. A significant part of the problem stems from a broader decline in Las Vegas as a whole, an impact that affects not only Caesars, but the entire region. One of the most notable factors is a noticeable reduction in tourism numbers. Throughout the year 2025, the total number of visitors plummeted, with the sharpest decline, around 11%, recorded in June compared to the same month the previous year. Fewer tourists mean less business for casinos, hotels, restaurants, and entertainment venues, which inevitably leads to lower revenues and diminished activity across the city. Another critical aspect contributing to the downward trend involves the exorbitant costs associated with visiting Las Vegas today. Prices for accommodations, food, drinks, and entertainment have skyrocketed, often described as stratospheric, making the city less accessible and appealing to many potential visitors. Dynamic or surge pricing systems, which fluctuate based on demand, often result in shockingly high room rates and exorbitant charges for meals and beverages. Additionally, the fees for hotel stays and parking can feel excessive, bordering on unfair or even deceptive. Such financial burdens can serve as enough of a deterrent for travelers, forcing them to reconsider or altogether abandon planned visits, thereby further dampening the city's momentum. Economic factors on a national level also play a crucial role. Across the country, consumer confidence has weakened, impacting discretionary spending, especially on luxury and entertainment activities like those offered in Las Vegas. This trend hits hardest in California, which acts as one of the largest sources of tourists for the region, meaning that any decline in economic vitality there directly translates into fewer visitors flocking to the desert city. Foreign tourism, another vital pillar of Las Vegas's visitor base, has also seen declines. The chief executive officer of Caesars observed that a large portion of the lost hotel nights is attributable to travelers from Canada. When tourists from Canada, Europe, and other parts of the world cut back on their visits, it creates a noticeable void in the otherwise bustling tourism industry. This decline is particularly impactful because international travelers tend to spend more per visit and tend to visit during peak seasons, so their reduced presence significantly affects local revenue streams. Lastly, the competitive landscape within the gambling and entertainment industry continues to intensify. Smaller regional casinos, along with the rapid growth of online gambling platforms, are gaining ground and attracting potential visitors away from traditional Las Vegas venues. This burgeoning competition, combined with changing preferences and technological advancements, makes it increasingly challenging for Caesars and their peers to maintain their dominance and appeal. In sum, the current setbacks facing Caesars Entertainment reflect a complex web of internal struggles and external pressures. These encompass declining revenues, shrinking occupancy rates, loss of prestige as indicated by their removal from a key stock index, mounting debt, and the broader economic and competitive shifts impacting Las Vegas at large. All these factors intertwine, casting a shadow over the city's once glowing reputation as the entertainment capital of the world. A city that continues to grapple with substantial challenges that could shape its future trajectory for years to come. People who once made it a point to visit Las Vegas each year now find themselves in a world where the thrill of gambling and entertainment is accessible much closer to home or even right at their fingertips, thanks to the rapid advancement of technology. The era of traveling across the country or even internationally just to experience the bright lights and bustling casino floors is gradually fading into the past. Now, with a few taps on a smartphone or through online platforms, individuals can indulge in their favorite casino games, enjoy virtual tours, and participate in gambling activities from virtually anywhere. This transformation has reshaped the traditional Las Vegas experience, making it more convenient and accessible for a wider audience, yet it also introduces new challenges for the industry and its operators. If you find this analysis insightful and want to stay updated on ongoing developments and deeper insights into these trends, it is worth following the latest reports and discussions on the subject. Moving forward, I intend to explore these stories more thoroughly, providing honest, unfiltered reports that reveal the true state of Vegas today, beyond the polished images and marketing campaigns. Such firsthand accounts will aim to give you an authentic understanding of what is happening behind the scenes, what the city is truly experiencing, and what changes might be on the horizon. So what actions are Caesars, one of the industry giants, taking in response to these shifting circumstances? The company has launched a variety of promotional campaigns and special offers designed to attract both new and returning visitors, hoping to reignite interest and boost their revenues. Their approach includes several strategic initiatives aimed at enticing people to visit their properties once again. For starters, they are offering discounts on hotel stays and dining experiences to guests who make reservations ahead of time or choose to stay longer for an extended period. These discounts serve as an incentive, encouraging visitors to commit in advance and spend more during their trips, thereby helping Caesars fill their rooms and increase food and beverage sales. In addition to personalized offers, Caesars also participated in a recent citywide promotional event called the Fairy Tale 5-Day Sale. This was a limited-time sale event during which discounts on resorts, entertainment options, and various attractions were available for a short period. The idea was to create a sense of urgency, encouraging potential visitors to take advantage of these reduced prices before the opportunity disappeared. Such promotions are designed to stimulate immediate interest and bring more foot traffic into their establishments, giving the casino giant a quick boost in activity and revenue. Meanwhile, recognizing the importance of local residents as a vital segment of their customer base, Caesars has also begun introducing special discounts specifically aimed at the people who live in Las Vegas. These deals encompass reductions on dining, hotel stays, and entertainment packages. Measures that reflect an understanding that the city's own community deserves support and engagement. It's a welcome acknowledgement that residents are an essential part of the city's ecosystem, and their participation can help sustain the local economy and casino industry alike. The big question remains, will these efforts be enough to turn the tide and revive the industry's fortunes? Caesars executives maintain a cautious outlook, predicting modest, perhaps even subdued results in the third quarter of the year. However, they remain optimistic about the prospects for late 2025 and the early months of 2026. The company's CEO has emphasized that their schedule is filled with numerous conferences, large-scale events, and gatherings scheduled for the remainder of the year. Should these events materialize as planned, the increased influx of visitors from conferences and conventions could significantly bolster revenues, providing a much-needed boost after a period of stagnation. From my perspective, I sincerely hope that the downturn we are witnessing is only temporary, a blip in the industry's long-term trajectory. Yet honestly, there is a growing impression that many people are growing weary of the current situation. We see persistent patterns of ongoing price hikes, hidden fees, and additional charges, elements that erode the value proposition that once made Las Vegas such an attractive destination. The long-standing allure of affordable entertainment and gaming experiences seems to be slipping away. The standard of value that visitors once enjoyed is diminishing, and this shift could have long-term consequences. The recent Fairy Tale 5-Day Sale might offer Caesars a quick avenue for recovery, delivering an immediate increase in visitors and revenue. Still, whether it signifies a turning point for the industry or is merely a temporary bandage remains uncertain. Time will tell if such promotional efforts can influence longer-term consumer behavior and restore customer confidence in the city's offerings. If the trend continues, the entire approach to pricing and the marketing of experiences may need a fundamental rethink. If Caesars truly wants people to come back in significant numbers and stay engaged, they might have to reconsider their strategies to make the city more appealing and welcoming for both tourists and locals. Let's consider some concrete figures to understand the magnitude of these changes. The resort fee at Caesars hotels now exceeds $50 per night, a significant increase from previous years. This fee is added on top of the room rate, which itself has climbed noticeably. In some more budget-friendly hotels like the Flamingo, Hara, and Horseshoe, properties that traditionally attracted more price-conscious travelers, the resort fee has similarly risen to $50 per night. Just a few years ago, these additional charges were less than $30 per night, making the total cost more manageable for visitors. The cumulative effect of these higher fees, combined with already elevated room prices, is starting to turn away certain potential guests who might hesitate to spend so much simply for a place to stay. The core issue here is that when such lofty resort fees are tacked onto room rates already inflated by market conditions, the perceived value diminishes significantly. Many guests are beginning to feel pushed away, choosing other destinations or delaying their trips altogether. If the industry aims for a full recovery of tourism, restoring the bustling casinos and vibrant entertainment scenes, it will be crucial to reconsider the pricing model. Transforming the 5-day sale into an annual event and continuously offering attractive packages and benefits throughout the year could be a way to entice travelers back consistently. Moreover, restoring a sense of goodwill among residents and local visitors, who have been largely ignored over the past 4 years, could also play a vital role in revitalizing the city's appeal. To succeed in this endeavor, Caesars and similar establishments will need to reevaluate their strategies concerning pricing and experience marketing. They must find a balance where their offerings remain financially viable while still providing genuine value to customers. This might involve lowering or restructuring resort fees, offering more inclusive packages, or creating compelling long-term incentives that build loyalty. In conclusion, if the industry truly wants to bring back the vibrancy of Las Vegas, substantial changes will need to be implemented, not just short-term promotions, but an overall reassessment of how they attract, retain, and reward their guests. Their ability to adapt to these evolving demands and perceptions will determine whether the city can regain its status as the premier entertainment and gambling destination. The recent financial figures, ongoing promotional efforts, and changing consumer sentiment all suggest that, while the situation remains challenging, there is still hope for a brighter future, provided that stakeholders are willing to embrace innovation, fairness, and a renewed focus on delivering real value. The conversation revolves around the prospects of Las Vegas evolving into a prominent and desirable destination for travelers in the coming years. It paints a picture of a city that is continually transforming, with new developments and innovative attractions gradually reshaping its image and appeal. The focus is on how this renowned hub of entertainment, gambling, and vibrant nightlife is positioning itself to attract even more visitors, offering them a diverse array of experiences beyond what it has traditionally been known for. As we look toward the future, it becomes clear that Las Vegas is not resting on its laurels. Instead, it is proactively expanding its horizons by investing in a variety of projects aimed at broadening its appeal to a wider audience. This includes the introduction of modern architectural marvels, the enhancement of cultural and entertainment offerings, and the development of new recreational venues. Such initiatives aim to create a more multifaceted city, capable of appealing to different tastes and interests that extend beyond the typical image of casinos and poker tables. Moreover, the city is set to increase its emphasis on luxury and sophistication, transforming into a sophisticated metropolis that can comfortably accommodate high-end tourists seeking exclusive experiences. This could involve the opening of upscale hotels and restaurants, as well as world-class entertainment events, all designed to elevate the city's stature on the global stage. These efforts are not only intended to draw in more visitors, but also to change the perception of Las Vegas as a mere gambling destination, presenting it instead as a multifaceted cultural and leisure hub. In addition, technological advancements and innovative infrastructure are playing an essential role in shaping this future vision of the city. The integration of smart technologies and sustainable development practices are helping Las Vegas become more efficient, environmentally conscious, and appealing to modern travelers who prioritize sustainability and convenience. These improvements aim to make the experience of visiting the city more seamless, enjoyable, and memorable. All these factors combined suggest that, in the coming years, Las Vegas is poised to evolve into a more diverse and dynamic destination. Its future prospects are rooted in a strategic effort to broaden appeal, enhance offerings, and modernize its infrastructure, ensuring that it remains a leading center of tourism and entertainment. The city's trajectory points toward a vibrant, innovative, and increasingly sophisticated metropolis that will continue to attract visitors from around the world, eager to partake in its unique blend of excitement, luxury, and cultural richness.